Hi, following the publication of the Finance Bill the other week, I thought I'd just take the opportunity of covering a few points in the Chancellor's recent budget that may be of general interest to you. The big talking point at the budget was obviously the new capital allowances super deduction. For those who've not studied the Finance Bill, the main points are as follows. Firstly, it's applicable to purchases of plant and machinery during the period 1st of April 2021 to the 31st of March 2023. There is no upper limit on the allowance. Importantly, the claims are only appropriate for businesses that are chargeable to corporation tax, so the new super deduction capital allowances are not available for unincorporated businesses. Expenditure must be incurred when an unconditional contract is entered into before the 3rd of March 2021 will not qualify. 130% enhanced deduction is available for general pool plant and machinery additions, which includes machinery, computer equipment, office furniture, commercial vehicles and such like. The 50% enhanced deduction for special pool plant and machinery additions, which includes air conditioning, hot and cold water systems and electrical systems, is available. The additions must be brand new and not second-hand or used. The additions will not include cars, and if a general pool asset that originally attracted the super deduction is disposed of in an accounting period prior to or indeed straddling the 31st of March 2023, a balancing charge of 130% of the proceeds received will arise, which is reduced pro rata where the accounting period straddles 31st of March 2023. Possibly one of the surprising things from the budget was that probably, like myself, you spent a fair bit of time pre-budget reviewing high net worth individuals' positions with a view that there may be changes within capital gains tax. The good news is there were very few changes. Indeed, I'm just reading here that I saw there was only a tax information and impact note that was entitled Capital Gains Tax Relief for Gifts of Business Assets. When I looked at this turned out to be a minor clarification of the law and not a wholesale reform of capital gains tax. One particular area that didn't receive a lot of media attention at the time of the budget is in relation to the new penalty regimes that have been under discussion for some time and have now been included within the Finance Bill. The new penalty regimes will cover late submission of tax returns and late payment of taxes. For late payment of taxes, there will be new fixed percentages, and for late submission, there will be a points-based system to determine the scale of the relevant penalty. For businesses that are VAT registered, the new penalties will be effective from the 1st of April 2022. Those taxpayers who are in self-assessment and have an obligation to maintain digital records and submit quarterly accounts, the date of introduction will be the 6th of April 2023, and for all other taxpayers in self-assessment it will be from 6th of April 24. I have to say it's important that you now read these new rules and prepare your clients, particularly those who have not been fully compliant in the past in relation to payment of tax and the late submission of tax returns. Thank you.